All right, folks, some of the fears have been realized. I'm not talking about the price going down, but the big boys utilizing the ETFs to maybe control price. Now, there isn't really clear evidence for this, but Bitcoin outflows on Thursday were really massive, a couple $100 million, and that's why we went down, and that's why we're continuing to go down right now at about 65,600. Eventually, it is going to stop way before we reach 60K, most likely. But the thing is, like, this has cost people a lot of money. We went down about 10%. Yes, the current dump is only about 10%. We started about 71K. Now we're at 65, $6,000, roughly 10%. Some people are still acting like Bitcoin is 15K and that like $6,000 is like 30, 40%. It's not, it's about a 10% drop. So percentage-wise, if you're not doing leverage, it's not really something to worry about. Yes, the altcoins have definitely dropped a lot, but that's your variability with altcoins. And they will rise up extremely fast when Bitcoin comes back up as well. So wouldn't be too worried about the altcoin fiasco at this point. Now, what I mean by the ETFs is, yes, people buy the ETFs and the companies have to buy and sell the ETFs when consumers do. So you might be wondering, well, isn't it consumers that are panicking and not these big companies? Not so much, because one of the biggest buyers of ETFs is other ETF companies, and the companies often buy their own ETFs as well. So they actually have a large holding in the ETF. Like one of Fidelity ETF's biggest buyers is BlackRock, and vice versa. And those aren't the only two. They all invest in their own ETF or their competitor's ETF for hedging and for other purposes. So they directly do own a decent chunk of Bitcoin. And they might be the ones doing some selling at this point to manipulate price, because obviously they own a lot of Bitcoin. MicroStrategy with Michael Saylor is not selling Bitcoin. They're trying to raise funds to buy more. They are bullish until the end, and they will make a ton of money on this because they are holding. Saylor's liquidation price is like way down, like 20-something thousand, like $15,000 or whatever, and he can always raise money. So Saylor's not in danger. Plus, he doesn't really, I don't think Saylor really leverages that much, but he has taken out a lot of loans and issued a lot of stock to buy more Bitcoin, but it's working out really well for him because his DCA price is very, very low. BlackRock and so might be taking hedging bets. They also might be taking leverage bets and then buying and selling their positions with the flow of news as well. Because we all know the Fed said we're probably only going to get one rate cut this year. And that upset the crypto markets because, as we've explained before, bonds are going to remain high in terms of interest rate. And if that happens, they are more competitive against crypto and stocks. You are talking about you're getting nearly a 5% return on bonds on like a 2-3 year bond with basically no risk. When you have that in play, compared to like a 2-3% bond with no risk, obviously people are going to be much more enticed to a 5% bond with no risk, and they would rather buy that rather than like try to gain 50% with a high risk asset like crypto. I mean, the government and the country is not falling apart, so they're going to get those 5% bonds. But that's bad for us in the risk on market because that locks up a lot of money in the money market and bonds, and that doesn't come into crypto. So we're waiting for that money to come into crypto, and people are seeing that's further away because right now we're at like 5.5% interest, and one cut will only be at 5.25% interest. And there's not even a guarantee that that one cut is going to come, because Jerome Powell did actually say that he didn't want to cut until inflation reached 2.6, 2.7, which may not actually happen this year. I'm still guessing they're going to get one cut, probably in September, pre-election. There's some political pressure, and Powell doesn't want to veer too far off course off his original plan, which was actually like 3 cuts this year. But the inflation data and the economic data has been really strong. Inflation has been sticky. The economic data signals the economy is still doing very well. So he has no reason to really cut. But I do believe there will be one cut this year. But people are expecting 2 to 3 cuts this year. So with the higher interest rate, people are sticking their money in the money market. So that's why we've actually been going down ever since the FOMC meeting, even though the CPI was low. And I definitely think BlackRock, Fidelity, and these other giants are taking advantage of that news. They know that people are already in the mindset that, you know, crypto might be not as bullish as we thought, and they're definitely taking advantage of that mindset because, you know, that's what those guys do. Like, they read the market and they're like, oh, that's an opportunity. Let's do some selling. When we sell like that, everyone's going to think that the entire market is panicking. They'll sell off so we can buy at a lower price. Now, the lower price doesn't mean they're dumping Bitcoin to like 30K or something. Like, they're probably just after these 5-10% gains because by the amount that they're buying, these 5-10% gains actually mean a lot of money. Yes, it can save them like literally hundreds of millions of dollars buying these ETFs. Now, some of their customers, when they see them sell, they're probably selling as well. So they're actually getting a 10, maybe 15% discount before we come back up. I do think we will probably come back up next week. There is just too much overall pressure on the buy side for this to last all that long. And obviously, like, eventually they're going to see that the price is going to near the bottom. So they're going to buy it back up sooner rather than later. But right now, that's probably why we're dipping. There is manipulation by these guys buying their own funds or buying each other's funds. And that will basically be the case now since these ETFs are in play. And I think you're going to get a much more kind of like moderated market that's dominated by the big guys. Except in the case of altcoins, they'll still be really wild. So I think you're actually going to attract a lot more people that just want to make a lot of money into those altcoins. Whereas Bitcoin, Ethereum, they actually might be in the realm of the big boys now. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.